everyone, thanks for joining me in my market report. My name is Mike, and if you're new to this channel, I go over mortgage rates, what it drives them on a daily basis, whether if it's economic reports, whether if it's some sentiment of the market, if headline news, what have you. We kind of get into the nitty gritty of what's impacting them on a daily basis, what to look out for the week ahead, and so that way you can try to plan whether if you're looking to buy or refinance and you're in the market, so you're probably being a little bit more cautious or at least a little bit more looking at where rates are at. Hopefully this video will give you a little, as a tool, will help you guide you if you should lock in or if you should float a little bit. So a little bit about myself is I'm a loan officer. I do work with the national lender, so please feel free to reach out if you got questions about like these videos with the mortgage rates. If you got questions about mortgage programs that are available out there, process, what have you. We're here to assist you in any capacity. If you guys are looking to refinance or purchase, we can help you out with that as well. We do got a lot of loan programs out there with great pricing, so please feel free to reach out and we can certainly talk about what you would like to do with your mortgage. So without further ado, let's jump right into this part. We'll start with the economic data today. We got two items here. We got the jobless claims, which comes out every Thursday. So last week's number was revised slightly higher from 348,000 to 349,000. These are first people applying for first-time benefits. Forecast come for 350,000, and it came in a little bit hotter at 353,000. But for the most part, these are within line. So this is still pretty good numbers here. These are kind of more of the lows we've seen since the whole pandemic and all. Last but not least, we got the GDP preliminary Q2 level here. So this is basically the second revision. So July we had the first one, the initial peak, which came in at 6.5%, and forecast kind of 6.7, and it came in a little hotter, 6.6, but not quite to forecast. So the final revision will be next month in September. Will be the final for Q2. So we'll have to wait and see what happens on that. So 7-year note, we did have this recently, the 7-year note auction. Just went okay, not too bad. So far, we don't. I'll touch on that, the impact on mortgage rates on that one. Today, stocks are down, taking a little bit of a breather. It's been going at new highs for the last several days here. We begin the Jackson Hole Symposium, which is all like last year. Instead of being actually Jackson Hole, they're doing it streaming on there, and it's loaded with a lot of Fed speakers today. And so far, the speakers have been pretty hawkish about things. You got Esther George, we got Kaplan, and Kaplan kind of changed his tune again from last week's conversation. So I'll touch on that. And we got Bullard all talking about they should taper sooner than later. Basically, is the message what they're providing here. And that's kind of the reverse what kind of led the drive up in stocks here. So those are kind of things that are beginning. The big one will be, of course, tomorrow morning when the Fed Chair Powell will be speaking. They want to get his input if they think they should start raising or start tapering sooner than later as well. The next meeting will be here in September, so that's just about another month away, and it'll be towards the end of September, is why I'm saying a month away. And again, that could be much sooner than they expected. So we could be starting the taper as soon as this year versus maybe beginning of next year. Also on the agenda, we got reports out of Kabul by the airport and the hotel that there was a couple of bomb attacks over there, which has killed several fatalities as well as some people who are wounded in there. Obviously, this is the beginning as we try to get people out of there, evacuated out of there. Our thoughts and prayers are with those people. Not only we're trying to get out of there, but those who helped and are unfortunately being left behind. So thoughts and prayers with those people that they survive, and peace and safety with those people. Let's move on. Take a look at the mortgage-backed securities. So as I mentioned, we didn't really get much of a reaction so far from the 7-year. Doesn't mean that it won't make much change yet, but so far there's not much reaction. But the big reaction we did get, we were up in positive territory for the most part and then pulled back, was the notes for the ECB meeting. Basically, they too were kind of having some discussion about possible their version of a taper over there, keep rates lower for longer time. However, to go ahead and maybe start reducing their asset purchases. So that is what kind of drove mortgage-backed securities into a lower level. We were actually higher, and then as soon as that was released and that was they reviewed that, it pulled back here on mortgage-backed securities. So now the stock market down, but mortgage-backed securities is down. We did close down a little bit further yesterday, down about 14 basis points. And coupled with this, yeah, we're going to have a lot of lenders will come out with a little worse pricing today as a result. So this kind of put us back underneath the 100-day moving average. We'll see if we can get some type of reversal, but looking at yields, we're already going way up here and then testing this 1.37 again. So the last time we tested, as you see here, several weeks ago, about 2 weeks ago, it did get pushed down here. So we'll wait and see if that transpires or if it breaks above it, because the next level above, you're looking at about 1.42 range here as well. So that would be bode well for mortgage rates here. So we'll keep our eyes on this, see if it can hold, and hopefully get us pushed back down, and then hopefully put less pressure on mortgage rates and help us out with that. But unfortunately, again, another day where rates have declined. But hold tight. We'll wait and see. Tomorrow could bring better news with the Fed, and also even later today. So we'll keep our fingers crossed and watch. If you guys got questions about anything, I'm here. Go ahead and reach out. I'm more happy to help out in any capacity. If you guys like these videos, please go ahead and smash that like. I would greatly appreciate it. If you could share these out there. It helps out the channel. And again, we thank you for your views and thank you for watching. And any participation you guys have, we greatly appreciate that. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you in tomorrow's video. Bye-bye.